Focus on some earnings as well. The first company on our radar this morning is CG Power. The company's growth in the first quarter seemed quite healthy. Order inflow was quite strong. Margins came under a little bit of pressure. In fact, the top line grew by about 29%. But if you see the EBITDA margins, then from a level of 14.7%, EBITDA margins came down to about 13.2%. So let's understand what's been happening and what the outlook is for the rest of the year. We have with us Amar, Kaul, Managing Director and CEO at CG Power, joining in. Amar, great to have you on. Morning. So let's just start by understanding the top-line growth. How much of that is your base business, the organic revenue itself, and how much came in through the recent acquisition that you made?
Sorry, there's a voice issue. Can you repeat your question?
Yeah. I was just asking that this top-line growth of 29%, how much is it organic, the ongoing base business, and how much came in from your recent acquisition, right? Axiro, the acquisition that you just made.
Okay, that's fair.
If you just split that, talk about Axiro's scale-up and give us a view on the growth on the base business itself, what you're seeing this year.
Sure. So if you look at, 29% you talked about the top-line growth, that is the consolidated basis. So our standalone business is at 25% growth with a PAT growth of 23%, so which is in sync with the way we are seeing the growth. And if I look at consolidated level, which is acquisition of Axiro, that has already been completed, and I think this will be the transition year. They already started getting the revenue, but yes, when you acquire a company, the first year will be the transition mode, and then it starts going up.
Yeah. So if you could give us a sense of scale, and that's very impressive. The base business itself grew at 25%, so we've noted that. Now talk to us about the scale up in Axiro. In FY26, how much will it add to your top line? And in FY27, when it's fully integrated with your operations, then what can we expect? And so then total growth going into FY27, what should we work with?
So we would expect Axiro to be at about 400 crores approximately to bring in this financial year, and keep building on the same.
At what growth rate? Amar, good morning. Prashant here.
Morning,
what rate of growth?
It's basically, we just acquired the company. So I would say it'll be a bit shade above what was done in, it was with Renaissance last year. So it'll be a shade above that.
Which is, if you can give us a number.
The shade.
Amar, at what, roughly, I mean, I'm not looking for specifics here, but just, over 400 crores, what's 27 going to look like and after that?
So long term, as you know, we don't give forward-looking statements in terms of the growth numbers, but I would say even the growth will be a double-digit growth to start.
Okay, double-digit.
The aspirations are huge there.
Okay, Amar, just one question on the OSAT, and we've spoken about this in the past as well, right? That has come online. It's showing up in your revenues. It's showing up in the bottom line as well, although in a negative way. Could you talk to us about where that stands now in terms of starting up and when will that business break even? Because it is taking a little bit out of your net numbers right now, but of course that's a matter of time.
Yeah, no, fair point. And as you know, semiconductor, India had no access to it, so it's a long-term investment. That's why it's a strategic investment. But the good news is, I think what we have been able to brought into the country is the technology of OSAT. The second good news is also that the project is ahead of the target. So hopefully in this quarter itself, we should be soon announcing the inauguration of the first facility, which we call the mini facility. And then it takes about 9-10 months approximately for approval and making sure that it gets commercialized. And FY27 will be the main plant, which is a larger one. So both the projects are going exactly in sync with what we have planned for.
All right. Hi, Amar. Good morning. Good to see you. When you're sitting on a solid order book of around 13,000 crores for the year, what kind of ballpark revenue growth can you deliver in comparison to last year? If you could help us out with a broad range. And also, what about margins? Power systems, the margins are very, very encouraging. Can those margins sustain? And do you expect the industrial systems margins to improve now that, there are some kind of price increases that could come about? There'll be execution of Kavach orders as well. So what is the margin improvement we are penciling in from here on?
Yeah, hi, Nigel. Fair point. So two things from the order book that we have, which is pretty healthy. So we'll continue the growth momentum that we have. As I'm saying, with the growth that we are seeing, we will continue that momentum. And
Amar, we have lost you, Amar.
The audio dipped.
The audio dipped, yeah.
Can you hear me?
Yes, you're back.
Yeah.
Please go
Okay.
ahead.
So I was saying the order book is strong, so we'll continue the momentum of the growth that we have demonstrated in last few quarters. And on the margin piece, absolutely confident on sustaining those margins, especially on the power sector, because the backlog that you see is at a fairly healthy margin, and also with our go-to-market that we are working on, I think it will keep building on for a couple of years as well. And on your other, sorry.
Yeah, please go ahead.
So on the if you would have seen industrial, there was a bit of pressure on the margin, but yes, we are taking the steps on it. Railway was a big function of that, where it was a mix issue more towards traction electronics. So that mix we are addressing. Plus, we are also looking at VAV to make sure those costs are going out, and also keep expanding into the new areas.
So 30% revenue growth for the year is on the cards with margins in the vicinity of.
I cannot put a number on that, Nigel.
So you can continue the momentum, right?
The same momentum.
Yeah, the momentum. So the momentum in the first quarter, you've done 29%. So you'll continue that. Maybe you'll do better as well. You have some of these new, capacities that are coming on stream. So we'll see. We'll keep it at keeping up the momentum and margins in the vicinity of improve around 100 basis points or thereabouts. So for the year on average, 14 to 15% is a gettable margin. Blended?
Oh, yeah, absolutely.
Got it. All right. That's out of the way. Just one more point on the QIP. You raised some money. The street wants to know, is there some big inorganic plan that's on the cards?
Sorry, I lost you in
between. Is there any inorganic growth plan, sir?
Oh, yeah. So yes, so we did raise funds, money for QIP. And as you know, one is to fund a bit of on the OSAT piece, as well as we are continuously looking at the pipeline of acquisitions. So we didn't want to wait for money at that point of time. And, some of these acquisitions can happen overnight. Some may take a bit more time.
So you raise
as we get closer, we'll, of course, keep you informed.
So you raise when you can, Amar, right? Are you interested in the Whirlpool stake, Amar?
Sorry, come again.
Were you interested in the Whirlpool stake? The Whirlpool, the parent is in a way selling out. Were you in contention for that? Did you look at it?
No, not really.
Did that ever come up? Was that or it never came up?
No, I think we don't go specifically unless we don't crack a deal. It's no point going into the details of that.
Okay, but you're not looking at it now, right? You're not. There's nothing happening there.
No.
Okay, so Whirlpool, not on your radar, but growth definitely is. Good speaking this morning. Thanks so much for joining in and giving us a sense on the business.
Thank
okay,
you so
I'm going to, thanks very much. I'm going to just pull it back to the market and pull it back to one stock. And this is what we had highlighted in our opening conversations this morning. Look at Bajaj Finance.